All right. Well, thank you everybody for attending for our, I suppose, our weekly webinar series we have going on here. This is the third one. So thank you for your attention. This one is going to be, it should be briefer. We're going to leave room for questions like we have in the past, but we don't have as much plan to go through as we did previously. If you've missed our previous two slides, or previous two webinars, I would encourage you to watch the recordings. Okay, so recordings are available. I'll show you where you can grab them in a little bit. But it is important that you probably watch the other ones. We're not going to reiterate everything as much as we did on the last call, though we will be talking about them. The other thing I wanted to highlight is I'm using the same slide deck for all these series of webinars that we end up doing. I'm trying to kind of keep it as a single source of truth so that we can stay organized and not have to keep referencing so many documents. If you're anything like me, you've got dozens of bookmarks all over the place, constantly getting outdated day by day. So the challenge is just understanding, what's changed. Things that I said in the first webinar may not even apply in some cases, and I'm going to talk about one of those specifically in a little bit. But as everybody's aware, things are changing rapidly. So just appreciate your patience and consideration. You guys have been awesome. Just kind of a note from my team that's been just sharing feedback. Obviously, there's a ton going on. You guys have a lot of questions. You're asking us a lot of questions. I just appreciate your patience and consideration as we, first off, learn what's going on from an outside perspective. What's the government doing? Then clarifying all the different rules that are happening. Development is working on building out all the items now. But now that we have a pretty good idea of what's going on, now we finally built out a bunch of these items in the system. There's still some things to be done. We're definitely going to talk about that today. We're also going to spend a good amount of time today showing and explaining the responsibilities that we need your guys' help with. Okay, so there's some things that we're going to need you to do in order to help us, manage this CARES Act and the FFCR. So without further ado, we are not going to go through the entire slide deck. All right, so I'm going to kind of be jumping around a little bit. The first thing I'll highlight is we have a couple links. All right, I'll start from the bottom. There's BeyondPay.com. So if you go to BeyondPay.com, we have an FAQ page. Please check that out. Please check it out daily, quite honestly, to see if there's any updates. So that's going to be a good source for you to review. I'll also highlight the link on the very top, dol.gov/agencies/WHD/pandemic. Sometimes I sometimes hesitate giving links to the IRS or the Department of Labor or any kind of government entity, but this is actually a good resource. It's a good summary. It has helpful things. You can get your posters here. If you haven't already posted posters for your employees, you can get them here. There's also a really good FAQ page, and I'm going to mention this hopefully a dozen times on this webinar. If you haven't read the FAQ page available, the links available here, please do so, and please check it maybe weekly, because when it first came out, there were only like 15 questions. The next day, there were another 10. By the next week, there were like 54, and now there's like 79 questions on there. And it's a long read, and I realize that, but you really need to read it. All right, so if you're a company with less than 500 employees, you really need to read it. Also, real brief summary, please use hr@beyondpay.com. We also set up a dedicated number that you can write down, 908-373-8870. That's also on beyondpay.com on our FAQ page. So this is for HR COVID-19 related questions. Okay, so you can get some personalized attention there. We're not a law firm, okay, but if you want to talk to a labor law attorney, we can connect you with somebody as well. But if you have any questions related to COVID-19 and HR, we've opened up this resource for free for all clients. Normally we charge for that, but it's free for the foreseeable future. Okay, so I'm going to jump ahead here. All right, so we'll just give a little bit of, actually, I want to show this one. So we'll just give a little bit of a summary, and I have a little bit of an update from something I said incorrectly on the first webinar. So I wanted to give a chance to clarify that right off the bat. This is probably the source of one of the most of the most questions that we're getting. So hopefully I can explain this better than I did the first time. All right, so the FFCRA is the Family First Coronavirus Response Act. This is something that allows employees to get paid sick leave, paid family leave, which means they get paid to care for their family, and then paid extended family leave. All right. The first two that I just mentioned are up to 2 weeks, and then the last one is up to 10 weeks, and this is paid by the company. And these 6 reasons right here are the eligibility reasons of when an employee can be eligible for this paid sick leave. The company needs to pay these wages out of their own pocket, and then they are reimbursed by the federal government by reducing their federal tax credits. Okay. Now, the point of clarification is item number 1. The employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19. All right, and it says right above that, an employer shall provide to each employee employed by the employer paid sick time to the extent that the employee is unable to work or telework due to a need for leave. All right, now the point of clarification that I want to make here is that this is only if the company is currently in business. All right, so one of the things I said on the first webinar is that if your organization has shut down due to a stay-at-home order, or if you're a non-essential business, okay, if your business has shut down or reduced work, or you've been affected by COVID-19 and you cannot have an employee working, all right, so your business is unable to continue, all right, that is not a reason to be eligible for this law. Okay, so again, this is something that that I said on the first webinar that was not correct. Right, and I've mentioned a couple times this resource, so I'm going to highlight this right now. So this is the page that I recommend everybody read, and specifically this very first one right here, the Family First Response Act, questions and answered. Click on that, bookmark this page, and come back and check it later. All right, and if you come down here, questions, I want to say 20. It's in the 20s, all right? And I'm not going to sit here and read all these, though we did debate on maybe doing a webinar just going through all these questions, because quite honestly, most of the questions we get are answered on this sheet, all right? So you can still use hr@beyondpay.com. We'll be happy to help, but just know that most of the answers that you probably have can probably be answered from this question and answer page right here. All right, so anyway, I didn't really need to pull that up, I guess. You're not actually reading it now. But the important distinction is I want to make is your business has to be a business in operation, all right? So if the employee is unable to work or telework because the business shut down, that's not what's going on here. So it's if the employee is subject to a federal, state, or local quarantine. So otherwise, the employee could work, all right? But because of COVID-19, the employee gets sick, the employee thinks they're sick, the government orders them that they're not allowed to leave their home and they're an essential business, so they can't get to work because of COVID-19. There's all these different kinds of scenarios. So again, for best clarification, go to that FAQ page, but I just wanted to highlight something, that this is something that I misspoke on that first webinar. All right, so your business has to be employed, starts as April 1st. All right, so if you have further questions on that, feel free to post them in the questions. We'll have time for questions. But we'll jump to the next slide. So I've added a slide here, FAQs and recent developments. All right, so again, just links to these pages. There's a much longer question and answer available here with many more questions and answers from the Department of Labor. If you haven't already downloaded your posters, make sure you do so. You need to post these at your work site, and you need to send them via email to your employees or make them available to employees and notify them some other way electronically. All right. go. And the other side of this is we have some ways of tracking this in BeyondPay now, and this is set up for virtually all of our clients. There are a handful that we haven't quite finished on, but you know, even by the time we're done with this webinar, by the end of this day at least, they should all be completed. So we've added, if you're using any of our products, we've added 3 new time off codes that can be used in BeyondPay. It's called the Emergency Family and Medical Leave. Okay, so this is that long extended 10-week one. And then we've added Emergency Paid Sick Leave, which is made up of self-care and the care of spouse, child, or parent. Okay, so that's the first thing we did. You don't need to do anything with this unless you wanted to like customize it or change the names or change some settings or something, which you are welcome to. It's your company, but we set these up for you. We've also set up 3 earnings codes. Okay, so we've set up 3 earnings codes: COVID-19 sick pay, COVID-19 child care, and COVID-19 child care 10 weeks. Okay, so these three codes are now available in your system. And the thing I want to point out here is it's really important that you use these codes. All right, don't try to create a new earnings code because you want to name it something different. If you're making any kind of special arrangements where you're paying employees, you know, leave even though they're not working, but it's not the FFCRA leave, then you should not be using these codes. Like, only use these earnings codes and only use these earnings codes when it's appropriate to do so. All right, so these have special tax implications. These flow through to your reports a little bit differently. They flow through to your for your tax calculations differently. They flow to your 941 differently. We calculate your tax deposits differently. They're not subject to Social Security for employer Social Security. All right, so really important that you only use these codes. And I put the maximum amount, $511 per day, total maximum $51.10. The other thing I want to point out here, and I'll reiterate this a couple times because I don't want you to forget, BeyondPay is automatically calculating and tracking and enforcing the maximum annual amount for these earnings codes. All right, so you won't be able to pay somebody, technically there's probably some ways of overriding it, but it won't be easy to pay somebody more than $51.10, okay, for the 10 days of self-sick pay. All right, but we're only tracking the maximum annual allowed by law. Technically speaking, all these codes have a maximum of their regular rate of pay. All right, so in theory, you could accidentally pay somebody $51.10 when in reality they don't actually make $511 a day. All right, so it's really important that as you're keying this in to payroll, that you're checking that you're not paying the employee too much. All right, so again, we're stopping the annual maximum limit, but we're not able to just figure out and know if we're paying them the regular rate of pay up to 80 hours. All right, now if you only put 80 hours in there, you know, we're not going to pay them more than 80 hours. But if you, for some reason, don't put 80 hours, you just override the amount and just make it $51.10 or something like that, like the system's not going to stop you from doing that. All right, we'll talk more about that in a little bit as well. But that's very important. We also, if you're using TLM or you're using payroll, we don't have a way of calculating the maximum per day. Okay, so there's no way of us knowing, especially if you're a payroll only client. Technically, if you're a TLM client, you could build that in, but it would require you set that up with the pay calc profiles or work with our team, with the implementations team, to do some kind of customization. All right, so we don't have any way, especially with payroll only, to calculate the maximum daily rate. We can only calculate the maximum annual rate, and we're going to enforce the maximum annual rate. Okay, the other thing to keep in mind is you need to determine the eligibilities for the tax credit. All right, so maybe this goes without saying, but if an employee comes to you and says, you know, I want to take out COVID leave, maybe they even request it through our system, you know, whatever the case may be, you guys need to set up an internal process where you verify that they do meet the eligibility requirements. All right, so go back to one of our previous webinars if you're not sure about that, or read that FAQ site just to make sure you're really comfortable. You don't want to pay an employee using these FFCRA codes and then have it turn out that they weren't eligible and then you lose your credit from the government. Okay, so there's nothing that BeyondPay can do to determine the eligibility for a tax credit. Whatever you key into our system, that's what's going to come out. What BeyondPay is doing, which I mentioned previously though, is we are creating those 3 new earnings codes. We set them up with rate multipliers. Okay, so what that means is we're going to pay them. I'll jump back to the previous slide for a second. So if they're using this first one, the sick pay for 10 days, all right, and you pay them for, let's say, 80 hours, we're going to take 80 hours times their regular rate of pay, and that's what we're going to pay them. For childcare, or for childcare 10 weeks, if you put in 80 hours, we're going to take 80 hours times their rate of pay, whatever their base compensation rate of pay is. We're going to automatically reduce it to 2/3 of their rate. All right, so the code will automatically reduce their hourly rate to 2/3 of their salary. Okay, but we are not able, at this time at least, maybe this will be a future update, but we're not able to somehow calculate the maximum of $200 per day at this time. Okay, so it's important that while we are calculating the rate automatically at 1.0 or 2/3, it's important that you enforce a maximum of $200 per day. Okay, so those daily limits are not going to automatically be calculated. First off, in payroll, you don't even calculate daily limits. You know, there's also some clarification in those FAQs that I mentioned, where if you pay an employee, maybe they're scheduled to work 10 hours a day, all right, you still pay them 10 hours per day, but it's capped at $200. Okay, so there's some language in there where you can't just go by 8 hours and automatically figure it out. So at least at this point, it's important that you guys figure out what is my daily limit as these employees are taking it, especially for the child care and the child care sick and the child care leave, extended leave. All right, the sick pay is a little bit easier because you're just paying them the regular rate of pay. I want to say $511 a day. I think that comes out to like $138,000 a year. So most employees are below the limit of this max, but a lot of employees will hit the $200 a day max. All right. The other note we put right in the bottom here, you need to determine if your rate of pay for base compensation rates are not to be used. So we're going to automatically use your base compensation, whatever's entered in base compensation. But if there's different kinds of employment arrangements where employees aren't paid a normal salary, a normal regular rate of pay for hourly employees, and you're not using base compensation, maybe you have varying rates depending on the type of work they do. Maybe they split time between different departments and get different rates of pay. You know, you're going to need to manually figure that out and key that in appropriately. You know, we don't have any way of automatically calculating that. All right, so that one's a little bit more unique, but it could come up for some of you on the call. Okay. All right, so these earnings codes are automatically going to tax properly. Okay, we won't go any more detail than that. The other thing that BeyondPay, this is the one we haven't quite finished yet. So, and we will need your help with this as well. So the other thing that BeyondPay did was create at least 2 new benefit accrual profiles for you, okay? If you use benefit accruals now, then we're automatically doing this. If you don't use benefit accruals now, then we're not touching this, obviously, because you don't have it set up, so it wouldn't do anything. All right. So this is a tricky one for us. We made a couple executive decisions to try to make things easier for you, but we will need your involvement, and your CSR will be reaching out to you to clarify this. The important thing to note here is that full-time employees, okay, are given a maximum of 80 hours okay, for their sick leave. Now, that's whether they use this one and this one, or just this one, or just this one. All right, so you can use sick pay maybe for a week, and then you can use childcare for another week, but you can't use you can't use 10 days of sick pay and 10 days of childcare, right? So it's capped at 2 weeks. All right, so a maximum of 80 hours. This is kind of the easy one. This one we can just set up for you. So if we saw a benefit accrual profile that was labeled as full-time employees, then we modified that full-time accrual profile to include the new FFCRA codes if you're less than 500 employees. For part-time workers, many of you don't offer benefits for part-time workers, okay? So in those cases, we had to create a new code, a new benefit accrual profile for part-time workers. But for part-time workers, we're not able to calculate how many hours they get. Okay, so what we'll need you to do, and your CSR will be reaching out to you for this, is you need to identify your full-time and part-time workers. And full-time needs to mean 40 or more hours per week, and part-time means less than 40 hours per week. So if you're in a situation where you have employees that are working 37.5-hour weeks, all right, and you consider that full-time, your company just considers a 7.5-hour workday to be a full-time employee, they're considered part-time for purposes of this law, all right? So it just creates a little bit more complexity. So we can't just go by what you say is full-time in the system, because your definition of full-time may mean something different than what this law means. So we're going to need you, and it would be helpful if you do this ahead of time, if you start creating a spreadsheet of every one of your employees. If you include the employee ID in a column, we'll be able to import this and identify whether they're full-time or part-time. And again, full-time means greater than 40 or more hours. Part-time means less than 40 hours. All right, and if you have a part-time employee that's taking the FFCRA, you will need to determine how many hours that would be. And there's kind of two ways of doing this, and you can read the FAQ for the real intimate details on exactly when to use which. Bottom line is, we created a report that looks at the previous 6 months of history to estimate what their average hours worked per 2-week period is. So we have a report set up available for you if you're using TLM. If you're not using TLM, then that's very complicated, if not impossible, for us to figure out, because we don't know the days that you actually worked. Because for payroll, we only have the total amount you had in a pay period in a week. So we can come up with some estimates for that we can help you with potentially, but basically you have to figure out, if that employee were to work for the next 2 weeks, what would their schedule have been, okay? And if you can't figure that out, then you use the average of the previous 6 months history, but you need to figure out what the average hours work. So you can't just automatically pay them 80 hours if they were a part-time worker. You would need to use the average over a 2-week period. I hope that makes sense, but it's just the way the law is written, it just needs to be done that way. So again, we have a report that's available if you're using time and labor management to be able to calculate this relatively easily. But if you're payroll only, it's slightly more complicated to calculate. It can still be done though. All right, the other update I have for you, so SOP, Standard Operating Procedures. So here's our game plan for how we're going to handle this going forward. So there's a couple things, again, important that you pay attention here. Honestly, everything on this webinar is very important, and we are recording this. So if you missed a part of it, you can come back and listen again. So BeyondPay will automatically reduce your federal tax liability by any FFCRA credits calculated down to 0. Okay, so if your federal tax liability was $1,000 and you paid $1,000 of gross wages, then we are going to automatically reduce that credit down to 0. Okay, I have a little spreadsheet, a little worksheet as well that I'll share with you in a little bit. Okay, just checking some of the questions to see if there's anything that's relevant right away. The other thing, excess credits can be requested by filling out a form. All right, so there's a link in this webinar, it's Form 7200. So let's say you've got $10,000 of federal tax liability, okay, but you paid out $20,000 of FFCRA leave and gross wages. Okay, in that case, you're able to get a credit back from the government in an accelerated way for the excess. I just forgot what numbers I just used, but for the excess $5,000, right, or $10,000. So let's say your tax liability was $10,000, your gross wages were $20,000, you would get a $10,000. We would reduce the $10,000, and then you would get another $10,000 after filling out this form from the government because of the overpayment. Okay. The other thing, excess credits can also be refunded on your second quarter 941. Okay, so if you don't fill out the 7,200, you know, we'll just refund them on your 941, and you'll get them back in July, possibly as late as August, depending. I don't know how long it's going to take for the government to refund this, but hopefully quick. And then you need to notify BeyondPay if you plan on taking advantage of any of the following. All right, so under the CARES Act, there's the employee retention credits. All right, and then under the CARES Act, there's also the federal FICA tax deferral, so Section 2301 and Section 2302. All right, and then any state-specific deferral programs, such as California, all right, I provided a link here to a document that we've put together that you guys are welcome to. So I'll pull that up now. Probably won't be helpful to read this at this point because it's the text is kind of small. But we've been going through and updating this as we get more information. Every state, we've put links to their SIT page as well to the Department of Labor. All right, so for the Department of Labor, that's unemployment. These are often the COVID response pages. A lot of states have accelerated when unemployment is available to your employees. So for any states that you guys are doing business in, this is a really great resource to point your employees to if you do have to furlough employees, either temporarily or terminate employees, so that they can get their unemployment benefits possibly a lot faster. All right, so we put together this resource. But some states, and we put some notes on those states down here, have some programs in place where you can pay your taxes late, your state tax payments late. We are not going to do that automatically, though. So if you want to take advantage of these, this is an area where you'll need to you know, work with your CSR on getting that set up and making arrangements for that. So I wanted to highlight that. Okay. All right. So just to reiterate, I already said this, but I also made a slide for it so I wouldn't forget. So the other standard operating procedures, we need you to identify full-time, which means 40 or more hours, compared to part-time, which means less than 40-hour employees. Okay. We're entering benefit accrual balances for full-time employees. You must estimate or calculate part-time balances. All right, we can help that with reports. It ends up just being an estimate, but basically when the employee requests time off, you need to go into the system and say, okay, all right, this is a part-time employee. They work 37 hours a week, so they're going to be getting 74. They're going to be getting 74 hours that I need to put in their accrual balances, and then I'm only going to take 74. That's assuming you're tracking it via accrual balances and want employees to request it. If you're just entering it in payroll, it's a little bit more straightforward, but you still have to calculate it. All right, if you're a TLM client, you're entering the time off on the timesheets or via time off requests, which flow to payroll. All right, and again, you have to manually track daily rate limits and override in the payroll pay statements. This is the one I'm really hoping I can have another update for you either next week or the week after that we can automate that as well. But for now, there's not a way to do that without a significant customization for each client. All right. And again, only use the FFCRA codes. All right. We've labeled them with FFCRA at the beginning of the earning code. So when you're keying this into payroll, make sure you're using those FFCRA codes. You have to verify the daily limits and maximum hours. All right. But we're going to automatically track the annual max, and we'll reduce it to 2/3 of their base compensation automatically. That's what the codes do. All right, so this is a good spot to pause. I'll provide a link for this as well. Let me zoom in a little bit. So we can see too much. All right, got it all on one page. All right, so this is another spreadsheet as an example. And again, we'll share the link to this on the FAQ page. All right, this is what we are working on. Okay, so this is not yet working. All right, so currently when you process your payroll using the FFCRA codes, we are properly going to calculate everything. All right, and we can properly calculate the reduction of the federal tax liabilities. The problem is we don't have all the areas of the system this affects updated yet. So for example, the FFCRA wage credit, the FFCRA Medicare credit, right? Because you're paying wages plus you're still paying the 1.45%, but the government is reimbursing you for that. So, and then the FFCRA healthcare credit. Okay, so currently this is going to be a new section on the payroll recap and funding report. All right, it's not ready yet, it's not available yet, but this is going to be a new section on the payroll recap and funding report. So just giving a preview of what's planned for that. We're hoping that's coming out on the 10th. All right, so we're shooting for this to be available on the 10th, which is Friday. All right, but you know how development goes. That could be as late as Monday. It could even be the following week if we come up with any bugs or some instability or something. But this is targeted for this Friday to be rolled out. So in the meantime, you will need to account for this outside of our system. Right, so the reports are going to give you the total federal tax liability. You are going to need to reduce the federal tax liability by the any FFCRA gross wages times 1.0145 to get the employer Medicare plus the healthcare credits. The other piece, I probably should have highlighted this box too. The other piece, not all of our clients are tracking your employer health insurance premiums through payroll. Okay, so if you're tracking that already, it's going to be really easy for us to help you calculate this, and it's going to eventually just automatically flow through here. All right, but if you're not tracking that already, you probably need to start planning to track that. So maybe get a spreadsheet together of all the employer insurance premiums that you pay for your employees, so that we can start tracking this on an ongoing basis. Otherwise, you can just enter it in as you're processing payroll. So when you put the FFCRA codes in, you can just also put another line item of employer health insurance premiums, and you can put an amount there, and then it would be calculated accordingly. All right, but this is still in the works. All right. All right, and then just a brief summary. We talked about this a lot more last week, so again, I'm not going to go into a lot of details here unless you have questions. But here are the available government assistance programs that are going on. All right, and I've added some summaries of the important, actually, they're all important, but these are the most commonly used ones. So I added summaries. There's the Payroll Protection Program, which I know a lot of you are aware of because we've gotten more emails and questions in the last 48 hours or 72 hours than we have, for like a typical month, it seems. But Payroll Protection Program is your best bet. All right, so if you're eligible for the Payroll Protection Program, this is probably the one that you go for. So there's just a little summary of this. I'm not going to go through this in a lot of detail right now, but I left a page in this webinar slide deck so that you can see the details there. The next one is the Employee Retention Credit. So that's the Section 2301. Okay, this one All right, you don't get to have all of these. All right, so you can't do the employee retention credit and the PPP and the tax deferral. All right, so you can't do all three. So you have to pick one of them. So if you're doing the PPP program, then you're not eligible for the employee retention credit. If you do the PPP program, you're not eligible for the FICA tax deferral. Okay, but the employee retention credit, this is available for a broader range of businesses. So this is the one to go for if you have more than 500 employees. But it also, quite honestly, might work out for you to do this instead of the PPP program in some instances. Okay, so you need to look at the details to figure out which makes the most sense for you. Talk to your accountant, talk to your tax advisor of which ones you think make sense. That's not necessarily something BeyondPay can really help you with. This is a little bit more of an accounting type of situation. But if you decide to do this, you need to let BeyondPay know. Okay, so this is something that needs to be tracked in payroll if you decide to move forward with this. Same thing with the 2020 FICA tax deferral. So if you've decided, if you've elected to defer your FICA tax payments, it's basically your employer FICA, 50% of your total FICA, so it's whatever the employer paid. You can defer that tax payment, and you don't have to make that tax payment 50% in 2021 and another 50% in 2022. Okay, so I left that slide there as well. Again, this is probably the last one that you'd want to use. So you would only use this if you're not eligible for the employee retention credit, or if the employee retention credit wouldn't result, you don't think, in a lot of money. You might want to do that, or you're not eligible for the PPP program, then the FICA tax deferral is probably your best bet. If you choose to do this, again, you need to notify support at beyondpay.com, and we need to set this up in the system. All right.
Jonathan, are you sure that you can't use the FICA tax deferral along with the employee retention credit?
I guess I'm not sure, but I thought so.
Okay, I want to try to see if I can verify that before we end the Q&A.
Okay.
I know the PPP precludes you from doing those.
Okay, but you don't think the employee retention credit is dependent on the FICA tax deferral?
I don't think so, but
okay.
I'm going to try to verify that.
That'd be good news. All right, so again, though, regardless, you need to notify us if you want to take advantage of either of these programs, okay? And kind of had it up on the slides as you were in here before, but there will be a place to handle that. So the EE retention credit, and then right here is the available OASDI tax deposit deferral. Okay, so we will be accounting for it in the system, but it does need to be set up. So if you're taking advantage of those two programs, you need to let us know. FFCRA, that'll happen automatically. Though if you're not tracking healthcare, you're going to need to let us know. You're going to need to start doing that. That's something we've been encouraging for the last several years, but not everybody takes advantage of that. So, you know, if we don't have your health insurance premiums in the system, obviously we're not able to track it. All right. Again, some links. But this one, active development in the works. So this is what we're currently working on. So this is what development's currently working on, you know, coming soon. So the FFCRA earnings codes will auto-enforce the proper limits without entering an annual max. This was just completed. Okay, so this was just released this morning, actually. So I did this slide earlier this week, and then this one's already updated. So the first one is already done. All right. Along with that, we're using a roll-up code. I guess it doesn't really matter, but for your purposes, we're basically going to be tracking the annual max automatically. There might be some videos and instructions that we sent out to you telling you need to set up scheduled earnings for all of your employees. That was originally our game plan. That's what I planned on showing you today, but that's no longer the case. All right. So we're automatically tracking the annual max. We're just about finished with automating the reduction of the federal tax deposit. So this is one of those, this is our problem, not your problem, okay? But because it's our problem, it's becoming inconvenient for you. So I understand that, but again, we just appreciate your patience and consideration here. We're working on the FFCRA, the tax deferral, the EE retention credit. We're working on having that automatically reduce the tax liability. You know, the fundamental problem here is it's not a per employee deduction. It's just reducing your tax deposit, which isn't tracked anywhere. So like, it's not like we can say, oh, take away $30 from Mary and $20 from Joe and $30 from Susie. We need to have a new place to track these tax deposits. So again, our problem, but it's not done yet. So what that means is when you process payroll, all right, we're doing something manually in the background to reduce your federal tax liability. Okay, so it's just not going to happen automatically, and it's not going to show up on any payroll reports yet. But again, I think that one is actually going to be fixed. We're hoping by the end of the day today. But that's actively being worked on. The other thing we're working on is handling the employer health insurance premiums. So start by making sure you're tracking them in BeyondPay, because if you're not tracking them in BeyondPay, there's nothing we can do. But for now, they need to be manually reduced, or you need to wait until the end of the quarter to get the additional credit. Okay, so again, stay tuned for this, but we're working on a way for you to enter in the employer health insurance premiums if you're not already tracking them. And then we're also working on having that automatically reduce the federal tax deposit. For now, it's not quite working yet, but it will be very soon. All right, and then we're working on the modified payroll recap reports. That's what I just alluded to a little bit earlier with that spreadsheet. So we're targeting 410 that'll be available. All right, we're also working on a solution for the employee retention credit. So we're gonna have a way of calculating the employee retention credits if you choose to take advantage of that. So that's actively being worked on, but it's not ready yet. Okay, kind of going alongside with the payroll recap and funding. I mentioned this on the last webinar. Make sure you're being careful with your general ledger as well. Okay, so there's going to be some things with this because of the way this new tax law is written. It doesn't have anything to do with an employee. Okay, so if you have a FICA reimbursement happening, we're just taking that reimbursement out of your federal tax deposit. So as of right now, here, let me pull up this spreadsheet again as we're talking about this. So as of right now, this tax liability, the 25, or right here, 32,510. All right, this is what our reports are going to say right now. All right, and we're not able. I'm sorry, I'm on the wrong line. Many of you aren't taking. If anybody's taking the PPP, you're not even gonna get this. So let me just hide some of these rows for a second here. Just hide that. All right, so we've got your sick leave, gross wages paid right here. All right, and then you've got your regular gross wages right here for a total of this. Here's all your calculated taxes. All right, here's your total taxes. And what you're able to do now is reduce the $1,333.40 from your federal tax deposit. And you can also reduce the Medicare calculated on these wages. So this is just 1,333.40 times 0.0145. All right, and then if you paid any health insurance premiums, you'd be able to add them in here as well. So maybe you paid $600. All right, that will reduce your tax liability. What BeyondPay is going to debit you and pay on your behalf, all right, it's going to reduce. So for now, this is not happening yet. It's not reflected in reports. So this right here, you will need to work with your accountant or bookkeeper to account for this outside of BeyondPay. We're not going to be able to help with this. We're not going to be able to provide a GL file if you're using our general ledger integration or anything. You're going to need to manually do a booking entry because we're not going to collect this amount from you. We're going to collect this amount. All right, so again, over time, this will be addressed, but this could be a point of confusion for many of you, or if you're on the line and your bookkeeper or accountant or payroll person that's responsible for this is like, hey, the numbers aren't tying out, just be patient with them because it's just out of necessity at this point because we're doing this so rapidly. All right. So we're going to get to a time of questions now. All right, so if you have any questions further, please post them. We'll also be giving more and more updates as we get them. Again, we're hoping very rapidly in the next 24 hours we'll have an update, and then by the end of the week we should have the payroll recap and funding report done, and then stay tuned for next week for you know, the rest of it. But we're very close. We're able to track it at this point. So there's a way to enter everything. We're able to track it. We're able to reduce the federal tax deposit so you can get your money back sooner. So it's very, very, very close. All right, for childcare leave, if an employee goes past the 2-week period and uses emergency family leave, is there a 10-day period when the employee has 0 benefits? Good question. So if I jump up to slide, I think it's right after 15, right here. All right, so what they're asking is if we have an employee that needs to go on childcare leave for the 10 weeks, all right, typically for FMLA, there's a 2-week period where you're not eligible to get your extended leave, all right? But in this case, you are allowed to use one of these 2 leaves for that initial 2-week period. So you can pay them 10 days at the childcare 10 days, and then 10 weeks at the childcare 10 weeks, and that can be concurrently. Okay, so yes, there's a 10-day period where you're not eligible for the childcare 10-week pay, but you're able to use this leave during that time. You could also choose to leave. You could also use other company leaves, if appropriate, if you wanted to. The DOL has also been clear that they're certainly encouraging companies to come up with special arrangements on this. So if you work out part-time arrangements for intermittent leave, they're being very flexible with those kinds of arrangements as well. There's also companies that are paying the extra 1/3, and that's being allowed as well. So even though they're on leave, you can supplement it with your own leave as well. You just cannot do this and unemployment at the same time. All right, you can't do that kind of thing. You also can't pay these wages using the PPP program, though you could pay them the excess leave using the PPP program. But good question. If an employee requests child care, is the employer required to verify that no one else is available for the child care? I haven't seen that question specifically yet, so I'm not really sure. You know, our kind of running, I don't know, Jason, if you have any more information from this, but our running recommendation is to request the documentation, and if you can't get documentation, to document that you didn't get the documentation.
Yeah, the best practice is to get a statement from the employee.
Yeah. There's also they've reinforced there's a non-enforcement period. All right, so for this month, there is a non-enforcement period as well. So you have a couple weeks to kind of give your best effort. Now, you can't just ignore it for the next 2 weeks and then say, I gave my best effort. So there's some stipulations in there. But again, that FAQ page, they've also explained that as well. Can you touch on the interaction between FFCRA self-care and New Jersey statutory short-term disability? We have an employee on NJ short-term disability for COVID-19 since early March. Would the employee first exhaust New Jersey STD benefits and then be eligible for FFCRA self-care payments? Yeah, so if they're on short-term disability, they would need to come back to work. And then once they are back to work and eligible for the COVID-19, and I'll pull up the reasons. All right, so they become eligible for COVID-19 for any of these reasons, and they're now rehired, they're an active employee, then you can immediately be eligible for this. Now, if they've somehow already used up some of their sick leave, that wouldn't make sense in your question, so I won't overcomplicate that. So it's not so much whether they exhaust the NJSTD benefits or not, it's whether they're employed by you or not. So the federal government doesn't really look at any kind of state rules or anything. The terms are that they need to be employed as of 4/1. Now, if they were not employed previously, again, that wouldn't account either, because if they're on short-term disability, they're still they're not considered unemployed if they're not considered terminated or furloughed. All right, so if you have terminated or furloughed employees, not eligible, but if they are an active employee as of 4/1, and they're and this is only for wages paid as of 4/1 and later. All right, we talked about that a lot on the previous webinars, but this is only for 4/1 and later. So I think I answered that question, but feel free to put a follow-up. Okay, I'm not sure. There's a comment in there. Diana, if we are an essential pharma manufacturing company, so if you want to post the rest of that question, maybe you asked a question previously and I just didn't put it together, but I apologize, but I'm not sure what that one means. What if we need to shut down to sanitize for a few days due to exposure to an employee who has a family member who has tested positive for COVID-19? Yeah, that's a really good question. So, and that was something that was addressed in that FAQ page as well. If the business is shutting down, if it's a business decision to shut down, you're not eligible for this paid sick leave. Okay, so this is not if the business shuts down. This is if the employee is able to work, the business is running, everything's good. Okay, good is a little too extreme, but the employee is able to work. All right, the company has business for them, and now because of something related to COVID-19, the employee is not able to work. Right, just the employee themselves, not the business isn't allowing the employee to work, but the employee is not able to work. So if you shut down to sanitize for a few days, unfortunately, that would not make you eligible for the COVID-19 leave. Now, the person that was sick, that got the COVID-19, would be eligible if, technically in some states, and I forget what all the jurisdictions are, but if there's a lot of things going around that if you were exposed, like you were in close contact with somebody that had COVID-19, they're asking you to like self-quarantine for a period of time. So in that case, and you're not able to telework from home during that quarantine period, all right, so that's a situation where the employee is subject to a federal, state, or local quarantine or isolation order. So if there's something in effect for that employee that prevents them from coming to work, yep. If the company is closed down because they're cleaning, no. So I answered a couple extra questions there, but what type of documentation is needed to get the credit on the tax payment? So it depends on which tax payment. The key thing here is to be tracked. So for FFCRA is to be keeping a record of your employee's statement. All right. So take a record of the employee going out, ask them for a doctor's note. If they can't give you a doctor's note because they don't want to go to the physician, right? That's being recommended right now, where you don't go to the physician if your symptoms are mild because they don't want to spread the virus. So ask them for documentation, but if they don't give it to you, just take their statement. Try to get it in writing. If you can't get it in writing, just log your calls and log your notes as best as you can. So for the credit on the tax payment, it depends on which tax payment. So your payroll records are a great source because we're going to have the amounts paid for the FFCRA for wages. So we'll be tracking all that. It's going to flow through the 941. We don't know what the 941 is going to look like yet. So we don't know exactly from a documentation standpoint that's going to be. But it's important to take your employee's statement. Jason, anything I say there incorrectly?
No, that's correct.
Okay. What if our system is already set up for part-time employees and they already accrue sick time? Good question. So I'm glad you asked that because I actually meant to say something about that. So if I come back here, tracking a BeyondPay, we've got 2 benefit accrual profiles. So we are creating up to, I can't think exactly. So here's the different scenarios. If we see a profile in there and it seems to be labeled as full-time, all right, what we're doing is we are adding to it the full-time settings for the FFCRA codes. All right, if we see a profile in there that seems to be part-time, we are adding to it the FFCRA codes for part-time workers. If we come in here and we can't tell if it's full-time or part-time, or sometimes some companies have a standard policy that applies for everybody, where it takes into account how many hours they work, all right? In those cases, we are cloning the existing profile, and we're going to relabel one of them as full-time and another one of them as part-time. And then we're going to be reaching out to you guys to tell us, okay, which employees are part-time and which employees are full-time. All right, so we're not changing anything on you. We're not changing any of your existing policies or profiles in the sense that anything's going to change for your other leaves, but we are changing things in the sense that there's now going to be a new code and we may need to reclassify employees into the 2 different codes. The other scenario is if you have a full-time profile there and then we don't see one for part-time, we're going to create a brand new profile that is COVID-19 part-time only. So we're going to be creating a brand new profile just for the part-time workers for COVID-19 purposes. You know, but unfortunately, this part-time profile isn't doing a whole lot because, you know, we're not able to figure out what your balances are for part-time workers. So, but at least once you do put somebody on leave, we have a place where you can calculate and figure out, okay, what's the maximum amount of hours they're able to have. I'm going to put that in as their max balance, and now I can kind of set it and forget it a little bit. Will the federal tax payments be reduced on a per payroll basis and not withdrawn by BeyondPay from the client account, or will the tax payments be withdrawn as part of the payroll draft? All right, so if you process payroll on Wednesday, Thursday, Friday, Monday of this week, so last Wednesday, Thursday, Friday, or this Monday, all right, then we were not automatically reducing the tax deposit, and we would have to collect the money, and then we'd actually can work it out to refund the money if necessary, but it just wasn't happening automatically. All payrolls processed going forward, though, they are all going to be automatically reducing the tax deposit. So if I go back to the spreadsheet, all right, so again, the spreadsheet's not available yet. This is what we're working on. It should come out on the 10th, but the logic still holds true. So if your federal tax deposit is $33,863.43, we are reducing that. All right, we're reducing that, and we're only collecting from you $32,510.70. All right, so we're reducing your federal tax deposit by the amounts paid under the FFCRA. And there's currently an issue right now with this extra 1933. So if you happen to process a payroll today or yesterday, you're probably already aware of that. That's something we're working on, but hopefully by the time you have to deal with that, that's going to be a non-issue. Can those notifications around deferring taxes be given at any time? Say a group wants to continue paying taxes but wants to be able to defer them at a later date. All right, so let's make sure I know what we're talking about here. So if I come to this slide again, all right.
I think
so
that's referring to the payroll tax deferral specifically.
Yeah, so if we're talking about the FICA tax deferral, all right, under the CARES Act, Section 2302, all right, so if we're talking about that one, then I don't know. I guess technically you could choose not to defer it, and then you could later. Basically, the way it's written, there's not a form to fill out or anything. It's really just notifying BeyondPay that you want to do this. Because there's not really a form. Basically, what's happening is the government is saying we're not going to assess penalties for a late deposit payment. So if you make a late deposit payment, they're going to treat it as if it was on time. All right, up to the 50% limits, and there's some stipulations and details in there. But they're just basically looking at it as if you made a late deposit payment, but they're going to be like, oh well, because it's within this 2302, it's not going to be considered late anymore. So I guess to answer that, you could turn that on and off.
That slide it's not a quarter one. It's basically the entire year that you can defer those taxes.
Yeah, you're right.
So that's just a mistake on the slide. So the way I look at this
starting
is
quarter one. That's what I meant to say.
Yeah, the way I look at this is that you can, by the end of the quarter, make the decision that you want to defer, and basically alter the 941. So but that may mean that there's actually money paid in, so you're not actually getting the benefit of keeping that money unless you make the decision earlier. That's not 100% clear, but it seems like if you decide you want to defer, you can alter the 941, and then I'm not sure, then you're going to have a credit going forward. That's something we're going to have to pay attention to. I think the bigger question is for people that, if you know for sure you're not going to do a PPP loan, then the sooner the better on that, at least at the beginning of the quarter. So even if you decide not to do it now and you want to do it starting second or third quarter, it's better not to pay the money in. I did confirm that the tax deferral is compatible with both the employee retention credit and the FFCRA. It's only the
Good.
PPP that it's not compatible with.
Got it. So you can do Section 2301, the employee retention credit, which I have on the slide right now, and the 2020. I do the same thing here with the FICA tax deferral there. All right, so you can use both of them at the same time.
Yeah, the law mentions 1106, Section 1106 and Section 1109. 1106 is the PPP and 1109 is similar to the PPP. It has something to do with farm credits. So it's fairly obscure. I don't know that it applies to many or most of our, or any of our customers who might be listening to this.
All right, what if we furlough someone who subsequently becomes sick with COVID-19? Do we have to go back and pay that employee if he or she has filed for unemployment? That's a good question. So if they were furloughed before 4/1, all right, then no. They get unemployment, they're no longer employed, they're not eligible for this. Okay, so if they were furloughed before 4/1, no. If they were furloughed on 4/1 or 4/2 or 4/3 or 4, you get the point, then yes, you would have to reclassify that. See, even that, if you're actually furloughing them, see that's where it gets complicated.
Yeah, John, I can answer that.
Or not. Okay.
So if they are furloughed and then later get COVID-19, they are not eligible for sick pay. They have to file for unemployment.
Got it. Okay. So if they were furloughed and then you hired them, there is a stipulation if they were furloughed during March during this event and then you rehire them and then they get COVID-19, they are immediately eligible. So they're, you don't have to wait for the 30-day rule for the extended family leave. So there's something in there for that, but okay, got it. So, but yeah, if they're furloughed and then they become sick, they're not all of a sudden somehow employed and you have to pay them and do back pay or anything like that. All right, another question. Sorry, how did BeyondPay calculate the hours for emergency family and medical leave and emergency paid sick leave? All right, let's jump back a couple slides here. All right, so this is a summary. Actually, you know what? There's a better, you got a better child care extended family leave. All right, so here's a better slide for that. All right, so how much do the employees receive? So this is if they're unable to work because they need to care for a child whose school or child care facility is closed. All right, it's 2/3 of the employee's regular pay, capped at $200 per day or $10,000 in the aggregate. All right, so this is for the extended 10 weeks. All right, before that, they're also eligible for up to 2 weeks. All right, the same exact calculation. When you're entering that in BeyondPay, you're just putting in, let's say they're a full-time worker, all right, you're putting in 80 hours. It's going to multiply it by their hourly rate of pay, and then it's going to multiply that by 2/3, all right, and it's going to pay them whatever 80 times their hourly rate of pay times 2/3 is, all right? So if they're over the $200 a day limit, you'll need to manually make sure you put a maximum of the $2,000. Now, technically, if you put 80 hours, it's going to do the maximum because it's not going to let you do more than the $2,000 maximum. But off the chances of this falling just on one pay period are probably slim, right? They're going to usually carry over from one pay period to another. All right. So I hope I answered your question, but how do we calculate the hours for, oh, you know what? You might be talking about the number of hours for part-time workers. So let me, just in case you were talking about that, let me talk about that. So the way you figure out the part-time workers is it's worded as if it's an estimate, all right? So what are they estimated to work during the time? Like if they were working, how many hours would they have worked? And if you're having trouble calculating that or you need guidance on that, you look at the previous 6 months of activity, assuming they were employed for the full 6 months, right? So if they only worked for 2 months, you don't have to calculate based on an average of 6 months because that wouldn't be accurate either. All right, so again, this is where it gets complicated because there's not a one size fits all. So for part-time workers, you need to figure out what the average hours worked times the average 2 weekdays worked, right? And I tried to come up with a couple different ways of wording this, because it just keeps getting more and more complicated as I say it out loud even. But you take your total work hours over a 6-month period, the total number of days worked over a 6-month period, and that gives you your average hours worked. Okay, then you figure out, okay, over that period of time, what was my average weekly days worked? All right, so take the total number of days divided by 13 weeks for a 6-month period, or 26 weeks over a 6-month period. All right, and that gives me my average weekly days worked. Multiply that by 2, gives me my average 2 weekdays worked. All right, and then I multiply my average 2 weeks days worked by my average hours worked, and that gives me my the number of hours that are available. All right, so you're trying to figure out what's the average my employee works over a 2-week period. All right, so if it comes out to 40 hours, 20 hours per week, right? The 40 hours would be the balance that you enter into the time off. And for the extended leave, it would be 20 hours times 10 weeks, right? And that's how you would calculate what the total would be.
John, I can take the next few questions if you're ready to
sure.
move
Yep.
on. So the next question is, does BeyondPay, sorry, I think I might have skipped one. Sorry. If you applied for the PPP loan, is it guaranteed that you're going to get it? Because we currently have employees out and not an answer on the PPP loan. Should we wait for a response from them first? So the PPP loan is not guaranteed necessarily for a variety of reasons. One being it is first come, first serve, so banks are struggling. Some major banks have already capped out on the money they've been allocated, and also the total funds are capped as well. Now they have said, President Trump has said that they're already working on allocating more money to the PPP, but it is not guaranteed. So when you say currently we have employees out, if you're going to do the FFCRA, you can do that no matter what. So the PPP doesn't affect that, other than maybe it'll affect how much you're forgiven. So for the FFCRA, you can go ahead and start doing that, even if you may or may not get the PPP.
In fact, you have to do it. So if they're employed and still working, you kind of have to do the FFCRA.
Okay, right. If you're choosing to go with the payroll tax deferral or the employee retention credit, technically, if you get a PPP, then you're not allowed to do those. So during that lag, we are advising clients that to go ahead and do those credits, and then if the PPP is received, that you immediately pay that money back using the PPP funds, or correct it going forward. And that's I would definitely check with your legal counsel or your accountant on that. That's just our opinion, that they're probably going to be generous as to how they allow people to catch up, because if with all the uncertainty around the PPP loans, if you need relief now, take the relief that's available now, and then we'll figure out how to make it whole later. So that's purely opinion. I would subject that to your own advice from your own financial advisor. As far, and the similar question, the next two are actually the same exact question. Does BeyondPay have to know if your company is doing the PPP program? We need to know as it relates to the payroll tax deferral and the employee retention credit if you decide to do that. So you need to tell us to turn those on or turn those off accordingly. But as far as whether if you apply to the PPP program and you're not doing the employer deferral or the employee retention credit, we don't need to know that specifically. So that answers, Liz, both those next two questions.
Andrew asked to confirm the credit for employer health care costs is only for employees on FFCRA leave. That's correct. Yep. So you don't get, if we look back at this spreadsheet again, I'll pull up. You don't get credit for all health insurance premiums paid, only health insurance premiums paid during this time period while people are on leave. All right, they didn't give any guidance on what about employees that are off for like a week. Like, how do you calculate? Do you prorate the whole monthly amount? I don't know the answer to that. So they haven't clarified that. It's a little bit easier on the extended family leave. Excuse me. So yeah, hopefully that answers that. But yeah, just for the premium payments paid during the leave. All right, and then another question, gonna make me do math. All right, so in calculating the 200 max per day, we came up with an annual salary of $75,000 as their benchmark. Yep, that's correct. In other words, if an employee is earning less than 75 annually, they will not run into the 200 max. Yeah, so if you take, you know, 75,000, all right, and we multiply or divide that by 52, we divide that by 5, that gives us our daily rate, all right, but we multiply this times 0.67, it's 193, all right, so a little slightly more than 75, right? So it's actually $200 times 5 days times 52 weeks divided by 0.67, so 77,612, 77,611.94. All right, so if you're paid over that, all right, so if you're paid over 77,611.94 annually, or you could look at that as, so this is an annual number. I should have just, I have a cheat sheet of this. I just don't know where it is off the top of my head, so it's easier to do the math. But so equals this divided by 52. And we can also even say equals this divided by 40. All right, so if you are an annual salary, 77,611, 1492.54 weekly, or $37.31 per hour, that's kind of the threshold. Once you go over that, you can just do the $200 a month, $200 a day. Be a good way to figure that out. I really, really hope soon we'll be able to do this automatically in the system because the rules are all there. It's just as of right now, unfortunately we cannot. So yeah, that's a good question. So I probably should have used your math to check if it was correct, but I think I answered it anyway. So you just stated if you're taking the PPP, a lot of this does not apply. So if you have applied for the PPP, should you not be doing, okay, hopefully Chris just explained that again. I probably misspoke. So all the stuff we were talking about, let me pull this slide up again. Where is it? All right, FFCRA, that's what the bulk of our conversation today was about. This applies for everybody with less than 500 employees. All right, so this one, we set it up for you. It's in the system. You got to use it. It's there. If an employee is sick due to COVID or they have to stay home and they can't work, then you need to provide this benefit if they're currently employed as of 4/1 and on. All right, the PPP loan is a part of the CARES Act. All right, if you do the PPP loan, you are not eligible for some of these other items, including the employee retention credit and the FICA tax deferral. So the FICA tax deferral, the employee retention credit, the payroll protection program have nothing to do with the FFCRA. So you always have to do the FFCRA if you're less than 500 employees. So if you're doing the PPP, what we're saying is you cannot do the employee retention credit or the FICA tax deferral. And I know that's clear as mud, but hopefully.
And I'll reiterate my answer again that if you're unsure about the PPP and you need relief right away, you can take the employee retention credit and take the payroll tax deferral and then sort it out when and if you get the PPP.
Yeah.
It may even be possible to stop the credits at the time you get the PPP and still, accept them, and still, it's not even clear that you're going to lose them, retroactively if you haven't gotten the PPP. So that's something we're going to have to figure out later. But I wouldn't, if you need the relief now, I wouldn't wait for the PPP.
If an employee wants to use vacation time to supplement the 1/3 pay on the 2/3 pay for FMLA, how do you recommend we do that? So on a pay statement, I probably haven't actually logged in the system, but basically on a pay statement, you would just put PTO and just modify the hourly rate to be less. And you could just pay them the FFCRA code up to the max, and then you can pay them as much as you want above and beyond that. So there's nothing disqualifying. You don't have to just get the FCRA. So you can just pay them an additional amount. I don't know, Jason, anything to add to that? That last question. But yeah, everything I've read so far, it's the 1/3. You can like supplement their pay to bring them up to their full salary. There's no restriction. You can also do intermittent. So if they need it off every Friday for the next weeks, or maybe they alternate with their spouse, right? That's been something that we've been suggesting. Can you be off for 2 days a week, and then your spouse can be off for 3 days a week, and kind of just alternate or something, kind of work something like that out. You are allowed to do that. It's not required. So the employee has to work that out with the employer. So if they want intermittent leave, they need to work that out with the employer. But if the employer agrees, you're able to do those kinds of arrangements as well.
That's right, John.
So Ron said, I had documentation that suggests that you were only disqualified from Section 2302 if you default on a PPP loan.
I can answer that.
Okay,
it's not default. The term, I'm looking at the final rule right now. If you have indebtedness forgiven under either Section 1106 or 1109, which is the PPP. So that goes back to maybe add some clarity to my other answer. If you do the payroll tax deferral now, and then you do get a PPP and you stop doing it, then it's going to affect how much of that PPP you'll get forgiven and how much will convert to a loan.
Yeah, so the PPP is technically a loan. They're just offering a forgiveness portion of it. If you do the FICA tax deferrals or the employee retention credit, you lose the ability to get that PPP, or at least portions of that PPP loan debt forgiveness. How do I get a copy of the presentation? I am glad you asked that. So if you go to beyondpay.com, we have a COVID-19 FAQ page, all right, highlighted on here. Please bookmark this and come back to it often. We're updating it constantly. I've got links to great site here for all the FAQs. So please, you have to read those. We put them right here. We put a big yellow alert box so you wouldn't miss it too. Please read those questions and answers. We'll put the latest webinar right here. We also have recordings of our previous webinars right here. And right here, there's a grab the slide deck. All right, so you can click right here, and that will take you to the same slide deck that we were just looking at. So you can get a copy of the recording. You can also get a copy of the slide deck. Okay, thanks. Andrew suggested there is a link now available. Doesn't let me click on the link or anything. But he suggested there is a link available for that the Department of Labor did issue the final rule on the FFCRA. So let's give guidance on documenting these requests. All right, so I guess they've given some recommendations on guidance. So thank you for that. Definitely.
I just posted a link in chat from the IRS. Notice 2020-22, which addresses the interplay between the payroll tax deferral and the other portions of the act.
Okay, cool. All right. Will we get updated payroll recap and funding sheets for payrolls completed earlier this week? Yes, so the payroll recap and funding reports will be updated later this week, and then they would apply to previously processed payrolls as long as you used our earnings codes, all right? So as long as you use our earnings codes that we set up, they will be updated accordingly. If a company gets the PPP loan, when the company will not be eligible for the then the company will not be eligible to the federal tax credit via FFCRA tracking. I think
We've answered that.
I think we answered that one. Got a bunch of thank yous in here. Very welcome. Yeah, appreciate all the kind words. It's definitely been a lot of learning for everybody. Is it mandatory that an employee use their PTO the first 2-week 80 hours period prior to the 10 weeks? Is it mandatory that an employee use their PTO? No. So it's not mandatory that an employee uses PTO. It's actually mandatory that you can't force an employee to use PTO. So it's actually the other direction, where it's the employee's choice. So if they have a PTO policy, all right, or a vacation policy or a sick policy, it's the employee's choice of whether they want sick time first and then the FFCRA, or if they just want to take the FFCRA. You can't tell them, hey, I want this COVID-19 leave. You can't say, oh, well, you have to use your sick time first. You're not allowed to do that for some reason. I'm not really clear on why, but there's probably something I haven't thought of a way to abuse that. Can our company apply for PPP program even if employees are still working remotely from home and being paid their full salary? Sure. Yeah, you can apply for the PPP program. I mean, I'd encourage everybody to apply for the PPP program. If you can get it, go for it. I mean, there's some situations. Obviously, if you're more than 500 employees, you're not eligible, then you can't, and then you take advantage of the other ones. But the PPP program is definitely worth trying to apply for. Find a bank that still has funds, or even still apply even if the funds run out, and hope that the government kind of funds it even more. Follow up on the vacation time. Do we put vacation on their timesheet to deduct from their balance? Yes. So if you're a time and labor management customer, you should be putting the vacation time and the sick time and the FFCRA time. You should be putting that all on the timesheet. It flows right through to payroll. You still have to make sure that you verify their daily maxes, though. We'll handle the annual maxes, but you still have to make sure that their pay is correct from that perspective. But the balances will automatically reduce from their accrual profiles. If they're a part-time worker, you also need to go in and make sure you override their balances so that their balances is correct when they first start taking that leave for part-time workers. For full-time, we're populating the 80 hours for you. You mentioned that a small business with less than 50 employees, you may be exempt from the family leave. Do you have any further information? Yeah, so that one, definitely pull that link. I want to say it was like in the 50s. I want to say it was like 50. No, I'm wrong. Sorry, I won't keep trying to find it while I'm on here, but it's definitely in here. It's closer to the beginning than the front, than the middle or the end. So I believe it was closer to the beginning than the middle or the end, but
I'm pretty sure it's numbers 48 and 49.
48 and 49, okay. So yeah, there are some exemptions for companies with less than 50 employees, but it is only for the child care and the extended child care. All right, everybody gets the sick pay, the 10 days of sick pay. There's potentially some exemptions available for these, and the FAQ gives details of when that is allowed now. So that's more clearly defined. Are you required to pay the other 1/3 PTO to those who are collecting the 2/3 pay? No. Or our company policy on PTO is paying half or a full day. Yeah, so you don't have to supplement PTO with the 2/3 pay. That's not a requirement. It's treated like leave. So it's actually treated more like leave than it is like a new PTO that they're eligible for. So if they're getting the 2/3 pay, you're not required to supplement it, but you're allowed to supplement it. If you need to modify your policy temporarily due to the emergency because you only allow a full or half day, I'd recommend just giving notice to your whole staff and maybe modifying your employee handbook. And as long as you're consistent with the policy with everybody, right? You don't want to be discriminatory and treat some employees differently than other employees. But no, you don't have to pay them the other 1/3. What is the max FFCRA a single childless, not sick employee person could take? So they're not sick. If they're not sick and they're single and they're childless, then they wouldn't be able to take anything. I mean, yeah. I might have missed the point of that question, but if they're not sick and they don't meet any of the rules, if they don't meet any of these criteria here, now I guess if their business is open and the government issues a quarantine order and says the employee's not allowed to leave their house and they can't physically drive to work, but that's pretty rare. So maybe in that situation they'd be able to. And then the max
What about
$511
if they have
per
to
day.
care for a, or if they have to care for a parent or another?
I guess
family
that's
member?
possible. Yeah, so maybe another family member that doesn't necessarily even live with them, but they have to go care for them. That would be a situation.
John, there was a clarification. It says for office closure.
For office closure. Okay, so yeah, if the office is closed, you're not eligible for this. If the employee is furloughed and they can't work, they'll have to go get unemployment. So yeah, if the office is closed and they can't telework, but if they're
So to more accurately answer the question, if they're caring for someone who has COVID, then they would be subject to the family leave amounts.
correct. Yep.
Would be the max amount.
Okay, I got a clarification question. The vacation question was in regard to the 1/3 pay to supplement the 2/3 pay. I understand we need to pay on the pay statement, but how do we deduct from their vacation time balance at only 1/3? Oh, that's a good question. So if you're using time and attendance, you would put you probably have to put the vacation time on the timesheet and put the FFCRA code on the timesheet, and then you would need to override the rate in payroll manually. All right, so if you're doing like a 1/3 supplementation on that. If you're a full suite client and you're using our leave of absence module, this can be automated. You can set this up to happen automatically where you supplement. But if you're not using leave of absence, the only way to do that would be to kind of manually go in and do that. If this is going to be something that you want, I don't know, if you have a very large number of employees that's happening a lot for, there's probably some ways that we could come up with some ways of automating it. If you're a TLM customer, we could probably get implementations involved and work on a project with that. But at least out of the box, you're going to need to manually do it. So I would recommend putting both PTO and the FFCRA code on the timesheet. And then when you process your payroll, override the rate for the PTO so that it reduces the hourly rate, the effective hourly rate that you're paying. And then maybe we put a timesheet note or a pay statement note on there, just kind of explaining what you did so that the employee can see it on their pay statement and you have a documentation of why you did that. We would still deduct the employee portion of healthcare costs. Yep, still deduct. In fact, you kind of still deduct everything. I haven't heard, maybe reach out to your 401k provider on how they want you to handle 401k and retirement benefits. I've seen companies wanting to do it both ways so far. I don't know if there's a solid, I haven't seen anything from the Department of Labor that says you can't deduct 401k or you have to deduct 401k. So it probably depends on your plan, on how your plan's written. But yeah, employee health care, definitely you can still deduct the employee. If you choose to pay it though, you will get reimbursed by the government. So it's something to consider. Maybe if you don't typically offer leave or anything like that, when the employee's on that extended 10-week leave, it might be worth considering just paying the full amount of the health care expense because the government is reimbursing you for it. So it's kind of a good benefit to kind of take advantage of in that case.
And just procedurally, as a default, we are not withholding 401k from the FFCRA. Is that correct, John? So if you do want it withheld, you need to let us know that.
I don't know that we have a default.
Okay.
Yeah, because every company could be set up differently. It just depends on how you. It depends on how you set up your 401k deferral of which earnings that's going to be reduced by. So if you have an opinion either way, you probably need to notify us. I don't know that we'll have a default. I suspect most companies, you're right, that we will not automatically deduct 401k.
That's what Camilla had said
But
in
not
regard to another client
got it.
specifically.
Yeah, so
Because we
by
went
default,
through this
most
discussion.
of them will not, but there are going to be some that will.
Okay.
So it's not a standard thing.
Jason, I've been, I want to see if you agree on this, that from a policy perspective, and this came directly from another client's 401k provider, that you follow a good, safe rules to follow the same rule you use for other paid time off
Correct.
with respect to 401k.
Yes.
Got it. So in that case, you probably should keep reducing it for most companies because most people do pay.
Probably, yes,
For
on the
time
sick
off.
pay, right.
But most people,
Vacation.
a lot of companies don't have leave policies. That's where we're getting a lot of questions as well of what do we do when an employee goes on leave because maybe we don't offer a leave. They just get the, the temporary or long-term disability or something like that.
Right.
Or FMLA for typical FMLA reasons. That's all the questions. So thank you for those that bore with us. Feel free to grab the
There's
recording.
one more, John.
Oh, there's another one. All leave will end as of 12/31/20, correct? Also no rollover period on any emergency leave, correct? Yep. So on December 31st, they could technically have a leave, but after that, at least the way everything's written now, this does not carry over, and this will all be done as of 1/1/2021. So this is only eligible as of 4/1 through 12/31/2020. So thank you very much, everybody. I appreciate you sticking with us. We've been trying to commit to answering all the questions as opposed to kind of doing the typical thing where we say, oh, we'll get back to you, just because there are so many questions, and this is a really good format for us to be able to answer them. So we'll continue to do these. As you have questions, hr@beyondpay.com. Check out that FAQ page that we've set up for you. Please read the content, especially this one. Give a really good source of information. But as you guys have questions, let us know, and we'll structure our future webinars accordingly. So thank you, everybody. Have a great day.
Thanks, everyone.